Hi, today I'm going to talk about fraud in the financial markets. As many of you that have been following me on my blog, The Underground Investor, you know that I've been blogging about fraud in financial markets for 4 years now. Certainly fraud has existed since day one that stock markets were established, but it's become a lot easier for the fraud perpetrators to perpetrate their fraud given the advances in technology. For example, today, in a lot of Western markets, stock markets are almost 100% controlled, not even by humans anymore, but by what they call HFT, or high frequency trading programs, which are algorithmic computer software programs. They're basically designed to rig markets higher, or even rig them lower at times they want markets to crash, because as many people don't think about big institutional firms, they can make just as much money on the way down as they make it on the way up. And in fact, they probably prefer crashes from time to time, because usually a stock market index will fall twice as quickly as it advances. So they can make the same amount of money in half the time during a crash. But some of the signs that I've been seeing over the more than a decade that I've been involved in markets are some of the following. For example, in June, the New York Stock Exchange, just 99 stocks comprised more than half of the daily trading volume of the New York Stock Exchange, which is ridiculous when you think about it. Just so on the volume of just 99 stocks, that's dictating the entire direction of the New York Stock Exchange. There are times actually during the financial crisis when just 4 stocks. It was AIG, Citigroup, Fannie Mae, and Freddie Mac, because those were the corporations that the government deemed as too big to fail, that they were covertly supporting. Those 4 stocks for days on end, for months at a time, back to back to back. Those 4 stocks comprised about half of the daily trading volume of the New York Stock Exchange. There was a particular day in December of, I believe it was 2008, that Citigroup stock comprised almost half, I think it was 47% of the daily trading volume of the New York Stock Exchange, just one stock. So it shows like how easily stocks the stock market can be manipulated. Computers also manipulate stocks because they manipulate the bid-ask spread. So basically what they're programmed to do is, say the best ask for a stock is $3.12. Well, if you enter, say, a buy order for $3.12, the algorithmic software programs immediately will tick that up to $3.13. So it will pull the existing bids once they see a bid matches their offer, to try to gain their profits higher, to try to make you buy at a higher price. So a lot of times you pull your buy offer, then it goes back down from $3.13 to $3.12. You put it back on, it goes back up. So there's a lot of tricks that are played in today's system, basically to gain profits. Financial markets have turned into basically one big rigged casino, whereas almost every trade is just like a I don't know what the proper analogy would be, maybe slot machines, because certainly the way that the big commercial investment firms like Goldman Sachs and JP Morgan control the stock markets through their HFT computerized software programs, they certainly can rig these programs to pay out to front-run clients to ensure that they make profits. In fact, there are 5 American banks. I can't remember if I can remember them all, but I know JP Morgan, Goldman Sachs, Citigroup, Bank of America, and I can't remember what the 5th bank was. But in the second quarter of 2010, all had perfect trading records on their proprietary trading desk. So out of 60 trading days over 3 months, they were perfect. So 60 winning days out of 60 trading days, which statistically would be impossible. I'm not even gonna say next to it. It would be impossible if markets were free and not rigged, because that was a very volatile period where some days the stock market was up 2%, and 48 hours later it was down 2%. And every time the proprietary trading desks of these 5 banks were able to guess right every single day which way the market was going, even though the volatility was crazy, like up and down by sometimes as much as 2 and 3%. Not one time they were wrong. So again, it's just a sign that markets are rigged. And I would say what's most important, again, which goes back to my educational video, is not to go to school. to learn what they want you to believe, or they want you to think, or they want to teach you. But if you study fraud and understand how fraud works, that will be 10,000 times more valuable to your wealth, your livelihood, than, you know, understanding what they want you to understand. Okay, that's it for now, and I'll be back with another video soon.